In this video, I'm going to tell you how to use debt to make passive income. Now, I know this might sound like a scam or some too good to be true scheme, but stick with me. When you hear the word debt, you probably think of something negative, like the burden of student loans. You borrowed tens of thousands of dollars to go to college, and now you're barely making enough to cover the payments. The promise of a high-paying job after graduation didn't exactly pan out, and now you're stuck in a cycle of debt repayment. But what if I told you that debt, when used wisely, can actually make you money? Debt keeps the world running. It's not cash, politicians, or Wall Street. It's debt. The wealthiest people in the world know how to use debt to their advantage. They're not just making hundreds of thousands of dollars. They're making billions, even trillions. But how can you, the average person, use debt to create passive income? How can you transform your debt into an asset that works for you? That's what we're going to dive into today. So give this video a thumbs up and let's get started. Why would anyone lend you money? You might be wondering, why would anyone give me money when they could just use it for themselves? The truth is, there's an enormous amount of money floating around the world, more than most people realize. Some people have so much wealth that they don't know what to do with it, and it's just sitting there, losing value to inflation. For instance, Apple has over $200 billion sitting in offshore accounts, and inflation is slowly eating away at that money. So if you can come up with a way to use debt effectively and show that you can offer a return above the inflation rate, they'll gladly lend you that money. In normal times, inflation hovers around 2 to 3%. Right now, it's a bit higher, but let's stick with that number for simplicity. If you can make 5% on the money you borrow, you get to keep whatever is left after paying back the loan. That's how you can start using debt to make passive income. Starbucks, the coffee bank. Let's look at a real-world example of how debt can generate massive income. What business comes to mind when you think of Starbucks? Most people would say it's a coffee company, right? Wrong. Starbucks is actually a bank that happens to sell coffee. Let me explain. If you're a loyal Starbucks customer, you probably have the Starbucks app on your phone. You load money onto the app so you can quickly pay for your daily coffee and rack up reward points. By the end of 2021, Starbucks customers collectively had $1.5 billion stored in their app wallets. That's more money than some banks hold. And here's the kicker. Starbucks can use that money however they want, whether it's opening more stores, investing in the stock market, or expanding operations globally. They're borrowing money from their customers with zero interest and using it to grow their business. In return, you get the occasional free coffee. Starbucks isn't just a coffee company. It's a financial powerhouse that's mastered the art of using debt. The rich borrow money to make money. So how do the rich use debt to get even richer? Let's take a look at some of the world's wealthiest individuals: Elon Musk, Mark Zuckerberg, and others. They own massive amounts of stock in their companies, making them billionaires on paper. But if they were to sell all their shares, it would crash the stock price, and they would lose a lot of their wealth. Instead, they use their stock as collateral to borrow money. Here's how it works. Say Elon Musk wants to buy a new mansion or invest in a new venture. Instead of selling Tesla stock, he goes to a bank and borrows money, using his stock as collateral. The interest rate he gets is incredibly low because banks know he's good for the money. Musk can then use that loan to make even more money, whether by investing in other businesses, real estate, or expanding his empire. Meanwhile, the Tesla stock continues to appreciate, and he's paying a minimal interest rate on the loan. This is how the rich use debt to keep getting richer without ever touching their actual wealth. Banks and debt, a love-hate relationship. For everyday people, banks are often seen as a burden. We take out loans to go to school, buy cars, and pay bills, and we spend years paying back the interest. But for the wealthy, banks are a source of passive income. They leverage their assets to borrow large sums of money, which they then invest to generate even more income. For example, let's say a wealthy investor borrows $10 million at an interest rate of 3%. They then invest that money in a business that generates a 10% return. After paying back the interest on the loan, they're left with a 7% profit. And because they borrowed the money, they didn't have to risk their own capital. This is how debt can be used to create passive income. And it's a strategy that the wealthy use all the time. How you can use debt to build passive income. Debt often carries a negative connotation, But for many, especially the wealthy, it's a strategic tool for growing wealth. By understanding how to leverage debt correctly, you too can use it to build passive income streams. You don't need millions of dollars or a large business to get started. Here's how you can use debt as a tool for generating passive income. 1. Real estate investing. Real estate is one of the most common and powerful ways to use debt to generate passive income. The process often involves taking out a mortgage to purchase rental properties. You can buy a property with a relatively small down payment, and the rental income from tenants can be used to cover your monthly mortgage payments. Essentially, your tenants are paying down your debt over time. Once the mortgage is fully paid off, the rental income becomes pure profit. Even before the loan is paid off, if you've structured things well, the rent should exceed your mortgage payments and other costs, creating cash flow. This steady rental income becomes a reliable passive income stream, and you now own a valuable asset, the property, which could appreciate in value over time. 2. Starting a business. Many successful entrepreneurs have used debt as a means to start their businesses. Borrowing money through a small business loan or a line of credit can provide the initial capital needed to launch your venture. A well-thought-out business has the potential to generate passive income in the long run. For example, a business like a vending machine service, a franchise, or even an online store can be built on borrowed funds. Once your business is up and running, you can structure it to run smoothly with minimal day-to-day involvement, providing you with a steady stream of passive income. The key here is to have a clear plan to ensure your business generates more revenue than it costs to repay the debt. 3. Investing in stocks with margin. Another method some investors use to leverage debt is through a margin account, where they borrow money from their brokerage to buy more stocks. This can allow you to purchase more shares than you could with just your cash, potentially leading to higher returns. If the stock market performs well, the gains you make can be much greater than what you could have earned with only your own funds. However, using margin comes with high risk. Just as your profits can be amplified, so too can your losses. If the stocks perform poorly, you could end up owing more money than you borrowed. Therefore, it's essential to approach this strategy with caution and a deep understanding of the stock market. 4. Leveraging credit for side hustles. Debt can also be used to fund side hustles that may turn into passive income streams. For example, you might use a personal loan or a credit card to start an e-commerce store, a blog, or develop an app. As long as you're borrowing responsibly and ensuring that your expected returns exceed the cost of the debt, this can be a viable strategy. When starting a side hustle, the borrowed money can help cover startup costs like inventory, marketing, or equipment. Over time, as your side hustle grows and becomes more automated, it can bring in passive income with little effort from you. Debt is a tool. Debt doesn't have to be a financial burden. When used strategically, it can be a valuable tool for generating passive income and building long-term wealth. The key to using debt effectively is ensuring that your income exceeds the cost of borrowing. Always borrow wisely, invest in assets that produce consistent returns, and plan carefully to avoid excessive risk. So, are you ready to start using debt to your advantage? Let me know in the comments, and don't forget to like and subscribe for more tips on building wealth.